Hello folks, so TGIF setup, three-phase framework. So now basically what is a TGIF? So simply it is called Thanks God Friday, or we can call it TGIF setup. It happens in Fridays, okay? Now just leave the theories, okay? And we'll be looking up at these two profiles, TGIF weekly profile. So now when we're looking for bullish, right? So when we are looking for bullish, then open, low, high, and close. So if you're looking up at this profile, Monday opening and creating the low of the week and going higher, and we have some of the reversals in Fridays, what we call retracement of 20 to 30 percentage in weekly range, right? So if you're looking for the bearish, open, low, high, close, I have already created video on it. You can be watching to understand it in depth. So if you're looking up at the bearish, right? So open there and created high and low and retracement and closing. So this retracement would be traded by us. If we are bullish, then we'll be looking up at the charts for bearish momentums in Fridays. And if we are bearish, then we'll be looking for bullish momentums in Fridays. So TGIF weekly profile. Simply until Friday, the weekly candle only moved in one direction. It can be creating the low or high of the day in Tuesday or Monday, sometimes Wednesday, and it'll be going in just one direction, right? Anticipate a retracement back into the Monday, Thursday range. We'll be looking for the retracement in Fridays, right? We can be having a possible setup of 40 to 50 pips. We'll be looking for. Reclaiming a chunk of the weekly range is the aim of the move. Make sure you have a target for liquidity. Like if you're watching the Fridays, you'll be having some of the liquidity. It can be internal way liquidity or either external way liquidity, right? So for the bullish TGF, we'll be looking for open, create the low, high, and then Friday some of the retracement, right? And if you're looking for the bearish TGF, so then we'll be looking for this open, high, low, close candle, right? So there you can see the 20% of the retracement, open, high, and low, and some of the retracement will be trading and we'll be buying from that retracement, right? And we'll be looking for the Judas move, right? And we'll be catching up it through market structure shift, and we'll be entering from the fair value gaps or order blocks, right? So now this is the chart example of this bearish TGF setup. Monday open, lower and lower, and Thursday we found this setup, created the low of the week, and then Friday we'll be finding this setup. We have changed in the state of delivery right there, or we can be calling it market structure shift, taking out the swing highs, and then we have retracement into the order block. We'll be just putting our buy limits there, and we'll be targeting this high, or even this high, the liquidity, buy side liquidity, right? Or even though we can be targeting this Monday's high. So let me show you the bearish example. So now we have the bullish, bearish TGF setup example, right? But like I've mistakenly just written it bullish, but you should be just keeping that in your mind that this is the bearish example, right? So Monday, and we have created the low of the week and higher, and then we have created the high Friday, and then we found the reversal into the Friday, right? And we'll be targeting this low, either this low, and can be use this low as a liquidity target, right?